Hello, traders. FX Pip Collector here. Today is Friday, and it is February 21st. And this is my morning video where we take a quick look at the US dollar pairs, including gold, and we also take a look at a few of the JPY pairs. If you haven't done so already, definitely check out my free Discord trading community, linked at the end of this video in the corner and in the description of the video. If you would like to check out my website, it's fxpipcollector.com. Get you access to all these benefits listed below and more. So, anyways, I always like to start off by looking at the news calendar for the day so we can be aware of what the news is. Today is the big PMI day when you have all this different PMI coming out from all kinds of different places. The European and the UK PMI is already out, as you can see, but we do have core retail sales and regular retail sales for Canada later on today in the New York session. And then we have the US PMI news coming out a little bit later in the session. And then we also have existing home sales, probably not a big deal. And revised consumer sentiment is actually the one that normally doesn't really have a big impact. The primary consumer sentiment has a much, much bigger impact. So both of these news events I wouldn't really worry too much about. But the Governor McClem is speaking from Canada today. And with everything going on with Canada and the US lately, I definitely would pay attention to this news event if you're in any Canadian pairs for sure. So, anyways, let's start off by looking at the US dollar index. It's an extremely important analysis for me when I'm trying to trade any of the dollar pairs. I still think this looks like a possible end of a correction, and I still think it looks like it should actually be continuing the downtrend and potentially going all the way down to here. Then, if this makes a big downtrend, then you would expect to see a big uptrend on all these pairs. Now, this is the weekly time frame. That doesn't mean there's not going to be rallies on shorter time frames. There definitely will be. That just means that these higher time frames, I think, very likely will keep going down. Now, yesterday I was talking about how we need to go below the 78% and we really need to push beyond that area. If we do respect the 78%, if we do go up and we do break structure, then it still could be an ABC and it still could end up going back up. To me, that still applies. Yes, it did go below the 78%, but so far it really didn't prove to me that it's going down because it didn't really, continue beyond the 78%. So it still applies. If it goes up and breaks structure, I definitely would turn back into a buyer for the dollar. If it doesn't go up and break structure but makes a lower high and just keeps on going down, then it definitely should confirm that it's not an ABC and that it's actually a 1, a 2, and we're in a big wave 3 of a big wave C, like what I showed on the weekly time frame. Now, keep all that information in mind because all that information applies to every single one of these dollar pairs. If I think the dollar is going down, then I would expect all these pairs to go up, except for the obviously the dollar CAD and the dollar Swiss. Those would also go up. So, anyways, let's start off on the euro dollar. Now, the euro dollar to me looks like it should be a wave one, two, three. If it is a wave one, two, three, then it should go up to one of these much, much higher Fibonacci levels. This little push down we got right here does not prove to me that it's going down. The only thing that's going to prove to me that it's going down is a break of structure to the upside on the US dollar index, which we don't have yet. If the dollar index does break up, then I definitely would turn back into a seller and I definitely would start looking for shorts on the euro dollar. But right now, I am definitely looking at any move I see to the downside as likely nothing more than a correction to the uptrend. This move down is pretty strong, so I wouldn't really expect it to just turn right back up instantly. At this point, I would expect to probably see at least a day or two of corrective price action. If we see some sort of a 1, 2, 3 pattern, ABC pattern, to any one of these Fibonacci levels, and then an impulsive turn to the upside, I definitely would continue to look for longs at the end of any pullbacks I see. If this really is a wave 3 on the much higher time frames, then this move down is definitely going to be a correction to this move up. Like I said, if the dollar index does end up breaking structure, then that's going to change it for me, and I definitely would start looking for shorts at that point. But for now, definitely still focused on longs and an uptrend. Moving on to the pound dollar, same exact thing. I mean, to me, the pound dollar does not look over. I mean, we're not bouncing from a fib level. We're actually right in between two fib levels. Definitely looks to me like a 1, 2, 3. If it is a 1, 2, 3, then I would expect it to go up to one of these two fib levels, probably even take out this high before we get a wave 4 and a wave 5. But just like the other pairs, it really depends on the US dollar index for me. For right now, I am definitely still looking for longs in an uptrend. first thing I would do now that we do have a little bit of a break to the downside is I would throw my Fibonacci retracement on here. Now, if you are long, you probably could get out because it is a break of structure. But for me personally, because of my higher time frame analysis, I am looking at anything I see into the downside is likely nothing more than a correction to the uptrend. So pullbacks are really nothing to fear. A pullback should actually be an opportunity to add to your position. So unless the US dollar index does break to the upside, I am definitely looking at this move down as a correction to the move up, but I'm definitely still looking for longs at the end of retracements, Fibonacci retracement on here to help me identify the end of three-way pullbacks. Moving on to the Aussie dollar. The Aussie dollar to me is actually one of the ones that really looks like it is not over. I mean, yes, we are at a fib level, and yes, it definitely could make a pullback, but overall, I think we are very clearly in a 1, 2, 3, and I really don't think this wave 3 is over. I would expect a decent amount of upside potential. Probably someplace up in this area is where I'd expect it to possibly end. And that does line up with our Fibonacci levels pretty well, too. So I'm definitely very bullish on the Aussie dollar still. Excuse me. So going down to the 1 hour time frame, I would put my Fibonacci retracement on here. Yes, we definitely do have a break of structure down. That probably does prove to me that this last wave up is over. But unless the US dollar index tells me otherwise, I am looking at every move I see to the downside as likely nothing more than a correction to the last wave up. So for me personally, because I'm not really trading the short time phase, I would prefer to just wait for another three-way pullback, put my Fibonacci retracement on here, observe these fib levels to see if we make three ways down to a Fibonacci level, which it could be any one of them. I think the 61.8 is a likely level because of these highs right here, maybe the 50. But the 50 and the 61, I think, are the most likely levels, but it really could be any one of these levels. If I do see three ways down, if I do see impulsive up, then I'm definitely highly focused on looking for logs at the end of every pullback I see still. Like I said, as long as the US dollar index doesn't break up, I am definitely still very bullish on every single one of these dollar pairs. Kiwi dollar, exactly the same analysis as the Aussie dollar, just a little bit, stronger or weaker depending on the currency strength. I don't really analyze it, but I do definitely trade it. Exactly the same as I do the Aussie dollar because it's exactly the same analysis, exactly the same structure. Moving on to the US dollar CAD. This US dollar CAD, I think, has a lots and lots of downside potential. Now, that doesn't mean that it may not potentially make a bigger pullback, but I'm definitely looking at any move I see to the outside as possibly just a correction to the downtrend. I am definitely highly focused on looking for shorts on this. This is likely the end of a correction on the weekly time frame, and if that's true, the higher time frames, like the weekly, daily time frames, should make lower lows, lower highs, probably for several weeks and maybe even several months. Going down to the 1 hour time frame, I mean, it definitely looks like the end of the cutscene already. I mean, I do see five waves up. I see what it looks like possible three waves down. I see what it looks like five waves up. It looks to me like the cutscene is already over. It looks like we already have an ABC cutscene. Now, that doesn't mean that it couldn't turn into more of a complex cutscene like a WXY or something like that and go up to a higher fib level before it turns. But this move down to me looks impulsive, which makes me think that this move up is likely just a correction to this move down, and likely we will get another lower high, and likely we will get another push to the downside. Like just like all the other dollar pairs, as long as the dollar index doesn't break structure, I am definitely still very bearish, and I'm definitely looking for any shorts I see, especially at the end of any three-way pullbacks I see. Moving on to the US dollar Swiss. US dollar Swiss is definitely a little different than some of the other dollar pairs, but same type of thing. I think this right here might have been the end of a trend. This is definitely five waves down, could even be a wave one. I think this is like a running ABC correction because it made a lower high, so probably a wave two, ABC of two. And I think there's a very good likelihood we're in a wave three right now, which I think is probably going to go down to this area, which is a support area in the past. So I would definitely be pretty bearish on this one also. Just like the other pairs, as long as the dollar index continues to cooperate, I definitely am looking for shorts in a downtrend. So we are pretty close to getting a break to the upside by the looks of it. It hasn't broken yet, which is why I haven't thrown my Fibonacci on there. But if and when it does break structure, I would definitely first thing throw my Fibonacci retracement on there. I personally wouldn't be trying to go long because I don't trade the sort of time frames anyways. But if it does break up, I would definitely be looking for shorts at the end of any three-way pullbacks I see. So if I do see a break of structure, throw your Fibonacci on there. and then observe the market to see if you can catch a three-way pullback to go short for the continuation of the downtrend. Pretty much the same strategy on all the dollar pairs as long as the dollar index continues to cooperate. Like I always say, if you know what the dollar index is doing, then you literally know what direction to trade on all the dollar pairs, except for gold, that is. And speaking of gold, moving on to gold. Now, gold, I definitely think is in an uptrend on literally every single time frame, and I definitely would recommend looking for longs on any time frame that you are trading. It definitely does have that 1, 2, 3, maybe 4, maybe we are in a wave 5. I still think the 261% right around the $3,000 an ounce area is going to get hit before we potentially have a more significant pullback. So, unless this thing goes down and breaks structure, I am definitely very bullish on gold still. Moving down to the 1 hour time frame, as you can see, we made a nice 5 wave trend up. If you've been following along in my videos, we've definitely been nailing our gold analysis pretty nicely. Now, most corrections do break the low of wave 4, and we have broken the low of wave 4, so keep an eye out for more longs. I am definitely looking at any move I see to the downside as possibly just another correction to the higher time frame uptrend. So I'm definitely looking for a Fibonacci bounce. I would like to see a break of structure to the upside to help confirm that we really are still in an uptrend. If I see a fib bounce, if I see a break to the upside, I would definitely go long. Whether it's going to happen now or not, I don't know. I mean, it could possibly go down to a lower fib before you get the break to the upside. But for me, I really wouldn't recommend looking for shorts because it literally could continue the uptrend at any point. I definitely would be looking at any move I see to the downside as nothing more than a correction to the uptrend still. The trend is your friend, and when the monthly, weekly, daily, 4 hour time frame and every single time frame in between is in an uptrend, you really need to focus on looking for logs. So moving on to the US dollar yen. All the yen pairs did make a pretty impulsive move to the upside yesterday and today, but for me, there's no break of structure. There's no reason whatsoever to think that this is still not in a big downtrend. Now, just because I say something is going to go down and make a big downtrend doesn't mean that there's not going to be big rallies on like the shorter time frames, like the 1 hour time frame. That just means that the daily, weekly time frame should continue to make lower lows, lower highs, which it's definitely still doing. You can't assume, every time you see a little push up, you can't assume that the market's reversing. More than likely, it's just another pullback, and more than likely, it will probably make another lower high and just keep on going down. Going down to the 1 hour time frame, yeah, it is a pretty impulsive up on the 1 hour, but if you're looking at it on any of the higher time frames, it's probably just another correction. This right here is definitely a nice little 5 wave pullback. More than likely, we are making a correction to that 5 waves. We got impulsive up. If we see corrective down, impulsive up to any one of these fib levels, and then we see an impulsive turn, then that's exactly what I would be looking for the continuation of the downtrend. Kind of like this over here, 1, 2, 3 waves up, go short. Even this little teeny one right here, 1, 2, 3 waves up, go short. So I'm definitely looking for 3 wave pullbacks, Fibonacci bounces to go short for the continuation of the downtrend on every single yen pair still. So moving on to the euro yen. Euro yen made a little bit of a push up, but I mean, if you look at it on the daily, it really doesn't even look like that significant of a turn at all. No break of structure, no reason at all to think that this is still not in a big downtrend. Just because I say that this is going to go down here and hit this area on the daily, weekly time frame doesn't mean there's not going to be potentially some rallies on the 1 hour time frame. That just means to me that the daily time frame should continue the low, high, low, high, low, high series that we've been making. So keeping that in mind, going down to the 1 hour time frame, a rally is no big deal. A rally against a higher time frame trend should be an opportunity potentially to go short. So I'm watching my Fibonacci retracement levels very closely. This move up definitely looks to like a trend to me, so I kind of think there's a chance it might go up again. I honestly wouldn't really recommend going short because going long, because even though it looks like it should go up and make a more proper ABC correction, when you're in a strong downtrend, sometimes you'll get what looks like a trend. You'll be like, oh, that's going to go up and make a wave C and then turn. But in reality, it just goes and goes and goes and goes because all your higher time frames are in a strong downtrend. We do have a 38% fib bounce. We do have a break of structure. I would expect this move to be like a wave B, and I would expect it to go up for a wave C, but I personally wouldn't be trying to go long to catch that wave C because, like I said, it could just keep on going down, and it probably will just keep going down. Moving on to the pound yen. Pound yen also made a little bit of a push up yesterday, but There's no reason whatsoever to think that this is not still going down for a big old giant wave C. And like I said, just because I say it's going down for a big giant wave C doesn't mean there might not be big rallies on like the 1 hour time frame. All it means is that this higher time frame, like the weekly and daily, should continue the low high series, which it's definitely has not broken that low high series yet. So we could still assume that we are in a downtrend. So keeping that in mind, moving down to the 1 hour time frame, this move up definitely looks like a trend. I would assume that this is a wave A. I would think that the next move would be a wave B, and I would also think that they would go up again for a wave C, making a more proper ABC crescent, and then going down from there. But because we're in such a strong downtrend on all the higher time frames, I wouldn't recommend going long because what's likely to happen is you're going to be like, oh, this is going to go up again. And you try to go long and then it just shoots right down. Now, it might go up and make a nice long for you, but I think it's a very dangerous trade. I think the better trades are definitely still looking for shorts in a downtrend. We have a nice Fibonacci bounce. We have a bigger structure. Maybe it will go up and make a wave C, maybe not. All I know is that I would definitely be looking for shorts in a downtrend, especially if it does make some sort of a three-wave pullback. One, two, three waves up is really what I'm looking for. But the market does make multi-wave corrective pullbacks quite often, especially the risk on, risk off currencies like the yen and the Aussie pairs and Swiss. So, anyways, don't forget to join my free Discord trading community. And as always, thank you for watching and happy trading.